Okay, what is going on, tycoons? What is up, traders? Super excited for today's video. Are you guys tired of getting stopped out just for a play to go correctly? For instance, maybe here you wanted to go short, all right, and you take a short position. As you notice, we have this nice supply zone right here, and then price wicks up above, stops you out of your play just for you to see a massive move to the downside that would have caused your short position to gain massive profits. In this video, I'm going to show you guys a strategy and a tool that's extremely useful for figuring out how to set a stop loss, and it's going to work on multiple time frames. Now, in particular, the first one we're going to look at is the daily chart, which I mostly recommend for swing trading. And then we'll zoom down to some smaller time frames to show you guys that you can also use this for day trading and scalping as well on a much smaller time frame. So what we're going to do is let's imagine that you're not a perfect trader, right? And what happens is you enter into a play right around here. Okay, so you enter in here right about halfway in your supply zone, which you know is an imbalance of sell orders where price action usually gets pushed down shortly afterwards, right? We come up here to the supply zone, we push down, we come up into the supply zone, we push down. So you enter, let's say you enter about halfway in, and you know, normally people might put a stop loss directly at the top of this supply zone. Okay. And you know, right here, we get wicked out of this supply zone, and then we ultimately come back down and have a strong move to the short side. So you would have made tons of profits on your play, but unfortunately you got stopped out. What you need to do is use the ATR right here. So you go over here to indicators, right? And you type in ATR. This is going to be the average true range. Now, what this does is this basically shows you how much the candles move on average, given that specific time frame that you're looking at. So we can see right here, all right, the average true range is going to be 257.93. So what we'll do is we'll take our level right here, okay, the top of our supply zone, and then we'll add 257.93 to it to give ourselves a stop loss. Now we're adding it because this is a short position, so price is going to go up and our stop loss is going to be above. All right, if you see, we went ahead and did the math right here. It's 12375.12. So what I've done now is I've gone ahead and put a level up here right there at 12375.12. This is going to be our stop loss, right? And again, we're just taking this off of the fact that we entered in roughly around the middle of our supply zone right here. We're not a perfect trader and didn't catch it up here at the top or anything like that. Just general, you know, using that entry. What you want to do is you want to have about a 3-to-1 or a 4-to-1 ratio when you're entering your trades. So you can use TradingView over here to go ahead and create a short position, right? So we'll create a short position right here, right? We'll put our stop loss up here, right at our level, and this is going to be our stop loss for the play. And then we're going to come down and we want this ratio to go to a 3 or to a 4. All right here in particular is the ratio. Now you can adjust this based on your own. You could do a 2-to-1 ratio, but you know, as a general rule of thumb, you want to have a 3 or higher risk to reward ratio. So that way, you know, if you're losing a certain amount of your trades, you know, that way when you still win, right? If you lose 2 plays, okay, and you have a 3-to-1 ratio, but your third one hits, you'll still be able to make some profits in there, and you won't be completely obliterated because, you know, you lost 2/3, and then on the other one, you came back and you made it 3/3. All right. So you were able to actually still be in profit out of the whole trading range. All right. And so here we're going to drag this down until it goes to about a 3. Okay. And so boom, we see here now our risk reward ratio is at a 3. All right. And look at how clean that play was, right? We you know, established our supply zone, our main area of interest, right? These are the areas that you want to focus on and trade. You want to, you know, try to enter around an imbalanced range. We established our stop loss up here, giving us plenty of room on the play. All right. And you can see that the short play actually worked and we came down and hit our levels. Now, you could have actually increased this to a 4-to-1 ratio and it still would have actually hit. Right here, we ended up hitting just barely short of it, 3.82, right? And you see we end up reversing a little bit, but there's potential this play still could be going down. So it's all about where you want to make profits at and what your specific profit goals are. But you know, as a general rule of thumb, you know, you do want to have like a 3-to-1 risk to reward ratio. Now, if we would have gotten into the play a little bit higher, okay, and let's say we got in closer towards the top of our supply zone, so we'll change that up a little bit. you can see it really helps you out. Right here is going to be a 3-to-1 ratio, okay, much higher than the other 3-to-1 ratio. And if you drag this down, you can see that we ultimately a 4-to-1 ratio is going to be right here, right around where this candle ended up perfectly closing. So even if your entries aren't perfect, you still want to be able to give yourself a valid stop loss. So that way you're not stopped out by something just strictly going above one of your zones. You want to use the ATR, the average true range, to go ahead and help yourself out and give yourself a valid stop loss. Now, the next one we're going to do, we're going to look at some day trading situations, right? So we're going to zoom down to some smaller time frames and really show you guys how that works. So what we've done is we've actually zoomed down now to the 1 hour time frame. Okay. And so the ATR is going to adjust by the time frames. So it's going to work on multiple time frames. What we're going to look at first is a short trade, and then we're going to look at a long trade next. So here we can establish we have the supply zone right here. Okay. We come over, we re-enter, and let's say we see this large push up and we say, hey, we just hit our supply zone right here, the top of our supply zone. We're going to go ahead and enter a trade position right into here. What we're going to do is we're going to see that the value of that is about 1229. Okay, and then we subtract that, or we add in our ATR at this point, right, which is about 84.97. This gives us our stop loss level right up here. Now if you notice, what this does was this actually comes right up to our stop loss level and reverses and works in our favor, right? So this is why it's very good, because if you would have had it a little bit lower, or just any degree a little bit lower, actually, you would have gotten stopped out of this play. But in this particular example, you can see we come right up to our stop loss and then get the reverse that we want. And remember, we're looking for 3-to-1 ratio trades. So, we have our stop loss set. Our reward ratio, our risk reward ratio right here is about 3.02. And you can see it comes down and hits that play very nicely. Now, these trades, we ended up, trading in a very nice range in through here. So it's multiple entries for shorts and longs. We're really just range bound trading in between this range. But again, using the 3 or 4-to-1 ratio, we can see that this play hits very nicely. We come up, we get very close to getting stopped out of our play. We come right up to our stop loss level, but we don't go past it. And you see we come down and ultimately we get the fill on the 3-to-1 ratio play. Very nice move there. And, it actually went down much further into our demand zone, and ultimately would have been a about 6.5-to-1 ratio trade if you would have been a perfect trader. But nobody's perfect. We're going to focus on 3-to-1 ratios. And then once you do that, you can try to move up to 4-to-1 and larger ratios. Okay. So that's an example of it working on the short side. Here we have on the long side, we have a demand zone established, right? And notice how each time we're wicking out and we're coming out of our main demand zones, right? So we have a demand zone established. We have buyers coming in right here on the market. We have buyers coming in right here on the market. And we have buyers coming in right here on the market. There's lots of demand at these price levels, and it's pushing the price up higher. So what do? We enter a play. Let's say we see it coming in right in through here. All right. And we see, all right, hey, we're in our demand zone. We've had lots of demand here previously in the past. I'm going to go ahead and take a trade, and we enter here off of this candle. We can see that from there, that price level is about 11,485.99. All right, our ATR is going to be in that top left-hand corner. It's 73.81. We're going to subtract 73.81 from them, and then that gives us our stop loss, right? So it does wick out of our demand zone here, but that wick was just drawing liquidity for the price to go up higher. And we can see it never triggered our stop loss. And this one, again, was a very nice risk to reward ratio, a 3-to-1 ratio. We can see that that play hit. Ultimately, that play ran up much higher, all right, and ran up a whole lot. It would have been about a 9-to-1 ratio, if you would have been perfect and caught that whole move. But again, we're not emphasizing perfect traders here. There's no such thing as a perfect trader, but this was a very nice 3-to-1 ratio. Two examples of 3-to-1 ratios on the smaller time frames, such as the 1 hour. And then we went over that one example on the daily chart. Okay, and how you can use this strategy to set yourself some very good stop losses. So that way you stop getting stopped out of winning plays. And really that causes a lot of mental frustration. Okay. A lot of trading is psychological. About 70% of it is actually psychological. And then the rest is up to you, right? If you can master the psychological part, you're going to really do a lot better and really give yourself a competitive edge. And you need to have an edge when trading, and using the ATR to go ahead and establish where to set your stop losses is really going to help you out. So that way you stop getting stopped out of profitable plays, and you can, have a really good stop loss. So that way you can, set your risk to reward management up. All right, you put your entry, you put your stop loss right here, and then you want to look for a 3-to-1 ratio at least. So that way, you can start setting yourself up with some really good risk to reward ratios. Again, we went over some 1 hour examples. We went over an example on the daily chart and how it works. So if you found anything useful in this video, make sure to smash the like button and subscribe to the channel. I just want to mention I do viewer requests every single week. So if you want to see your ticker symbol broken down, you want to see some technical analysis on it, or you like a strategy or tutorial you would like me to explain and make a video on, all you have to do is comment down below, and I'll be happy to get to it as soon as I can.